Welcome to Striking Options. The show reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Bob Icino. Welcome, Bob, and Happy New Year.
Happy New Year to you as well, Jeff.
Well, I'm excited, and the markets seemingly have their momentum from 2019 still intact. Are we in store for another big year in gains for the S&P 500 like 2019?
I would question big gains, but I think it's definitely on the bull side of things. We could see maybe single digits, my opinion only, but it could build from there if we get some increased demand.
And an interesting fun fact, two stocks that contribute to nearly half of the 30% S&P 500 gains, Apple and Microsoft. Will we see those FANG stocks really contribute in 2020 like they did in 2018, Bob?
My opinion is they might pull back a little bit. You might get a little leadership out of the Russell this year.
All right, great stuff. Let's get into this first lightning round, pal. You ready?
I am ready.
Geopolitical tensions. Well, we have seen crude oil spike due to the fact we have seen tensions really mount in the Middle East. And it's interesting to see crude oil vaulted above $60, but now it's taking a little bit of a breather, Bob.
Yeah, it actually reacted very similar to the way it did in the September 16th strikes on the Saudi facilities, but has not pulled back as aggressively. So the trade example I'd like to look at is selling a put spread in crude oil, selling the 60 put and buying the 58 put expiring around January 17th and collecting about $230.
I think this is really interesting. This is the March future as the underlying futures contract, trading around 62.31. That at the money volatility, pretty elevated 28. But this trade example you're utilizing, this is with the belief that you see crude oil, WTI, staying vaulted above $60 as we are not really seeing this geopolitical tension abate anytime soon.
Right. The support in the March futures from that old channel is right around that $59, $50, $60 range. So it could hold pretty well.
And at the same time, when we're seeing this little breather in the market, we are seeing a little bit more of a handsome collection in that premium due to the fact we did see a little bit of a sell-off.
Yeah, and spike in volatility has come off a little bit, but still, to get back to normal levels, it's got more room to run.
All right, great stuff. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
I am ready.
U.S. Treasuries. Interesting to see. We have seen the 10-year note. It's hard to believe. It's a decade later, post-crisis. Here we are in 2020. And where's the 10-year note? It's back under 2%, Bob.
A lot of people were predicting last year at this time a 3% 10-year note. We're even lower than we were at the start of last year now.
And it's interesting, the first 2 days of the year, we did see those geopolitical tensions put a little bit of fear into the market, and they came and grabbed treasuries. So the trade example I want to utilize, due to the fact I think we are range bound in the 10-year. I think we will stay underneath 2%. So I want to be a buyer here of a call spread. I want to buy the 10-year note week 3. 130 half or 130 16 if you're an old pit trader. The 130 half, 131 half call spread. That's a full point there, Bob. It's expiring Friday, January 17th, just like yours.
Yeah, the March underlying futures was about 129.08 when we priced this. This spread should cost an investor, what, around $48?
No, that's right. And the at the money volatility, just under 5, closer to 4.5. But this approach, this is an inexpensive approach. In the event we do see the equity markets pull back, they will come and buy those treasuries. And typically, historically speaking, you have seen that 10-year note really move down in yield, up in price when you do see a little bit of repricing going on in the equity market.
Right, and the at-the-money volatility really is not elevated with this particular spread.
Well, that's a great point. Well, Bob, thanks as always. I want to thank you for tuning in to Striking Options, this first show of 2020. We want to wish everyone a very happy and healthy new year, and please tune in every week as we will continue to strike options.